Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for the week ending December 1st, 2023. Let's get into stocks. In a marked change from the trend toward mega cap growth stocks during the better part of this year, small and mid cap value and growth stocks drove the markets higher last week. The Russell 2000, which is heavily weighted to small and mid caps, increased 3.12%. The U.S. benchmark S&P added 0.83%, while the NASDAQ gained 0.41%. Now, overseas, the developed markets rose 0.4%, and the emerging markets gained 0.2%. We've seen the NASDAQ up 37%, the S&P up over 20%. Some of our holdings are up over 20, 30% in response to that. So a lot of the losses from last year are brought back this year. Still not 100%, but really close. Real estate and materials, while communication services and energy were the laggards. Now let's talk about fixed income. Bond values rose as interest rates declined, with the benchmark 10-year Treasury ending at 4.22. Remember, that was up over 5%. So it's down 25 basis points for the week, and this is a 76 basis point drop, or just over 0.75% from the year's peak of 4.9%, which was on October. Now, when inflationary concerns were much higher, that's what was happening there. So it was over 5, it's way back down, which is also helping the bonds. Let's talk about gold, which is an endowment series and precious metals strategy holding, reached $2,083 per troy ounce last Friday, up 3.37% for the week at its peak so far this year. The precious metals increase has been driven by both lower bond yields, less competition for gold, which produces no income, and demand for safe haven assets in a period of geopolitical concerns around the Middle East. Now, this yellow metal is up 13.77% from early October, and just before the outbreak of the war in Israel and Gaza. Let's talk about economic data. The index of manufacturing continued to indicate slowing in November, contracting for the 13th consecutive month as manufacturers trim production and employment in response to the soft demand. At 46.7, the index was equal to October's read and slower than consensus estimate. Anything above 50 indicates growth, so it's under, so it's contraction at this point. I'm still waiting for the revision of these numbers. They're always saying everything's so great, then they revise them the month, so I don't know what to believe, but it's not too bad, allegedly. Okay, retail inventories were unchanged in October, ending several months of inventory builds. That follows a downward revision of 0.4. Again, a downward revision of 0.4 rise in September. Motor vehicles at dealers have been lifting retail inventories and continue to do so in October. However, excluding vehicles, retail inventories in October fell 0.9% from a month prior. On a year-over-year basis, inventories excluding vehicles declined 0.8. We're starting to see more vehicles build up at the dealers, which we haven't seen in the last couple of years. Let's talk about company news. Interest rate sensitive financials and real estate holdings, Alexandria Realty, which is a contrarian choice, a G50 holding. And then you have Blackstone, which is a G50 holding. Charles Schwab, which is a contrarian choice, Core Select, and G50 holding, were up sharply with the stock market rally and the drop in interest rates. ARA rose 12.32%, BX added 6.8%, and Schwab was up 11.93% for the week. Talk about Palo Alto Networks. We've talked about this one before. It's a Core Select and G33 holding. Shares were up 10.04% as the cybersecurity stocks remain strong performers, boosted by last week's quarterly reports from CrowdStrike Holdings, which beat consensus expectations. That concludes this week's market commentary. Thank you so much for being part of the ARA family. If you need to get a hold of us, you know how to reach us, 855-756-5700. Visit us at aradvisorsinc.com. We're getting toward the end of the year, of course. Not much time left. We're trying to do Roth conversions. We're trying to do a lot of strategies, changes right now, but it's a little, Schwab is getting a little inundated with changes. Things are taking a little bit longer. So hopefully we got everything in that we need to get done for the end of the year, because you're starting to see it kind of build up a little bit. So anything you need to get a hold of me, make sure we don't wait till the very last day, because it's not going to happen. We'll keep reaching out. Let us know if we can help you. God bless you. We'll see you again next week.